Welcome to Brookfield Perspectives. Today we're debuting a new feature called Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, we're speaking with Dave Gregory and Dave Hall from our private equity group about Brookfield's recent acquisition of Chemelex, the leader in electrical heat trace systems. Dave and Dave, it's great to have you both here with us. To get started, can each of you tell us a bit about what you do at Brookfield?
Good morning, Dave Gregory. I've been at Brookfield 15 years. I'm our Global Chief Investment Officer for the private equity group, and I also lead our U.S. industrials investing for the private equity group.
And what about you, Dave?
Hi, yes, Dave Hall with Brookfield Private Equity Business Operations. I've been with Brookfield for 3 years.
So Dave Gregory, I'm going to have you tell us a little bit more about this transaction. Who is Chemelex and what exactly does this company do?
Sure. So we closed the acquisition of Chemelex in February of this year. This was a carve-out from nVent, a U.S. publicly traded industrial company that we did for $1.7 billion. Chemelex is the global leader in electrical heat trace systems. Think of what that means and what heat trace is. I want you to imagine a chocolate factory, a large, complex chocolate factory. Pipes going throughout the entire factory, chocolate flowing everywhere. What's really important is that that chocolate stays at the same temperature throughout the entire factory. So it never hardens up, never gets too hot. And that's what electrical heat trace does. So this would be wiring connected to systems that regulates the temperature of fluid within pipes. So it would keep that chocolate at a constant temperature throughout the entire process of the factory. Now, chocolate factories are not the main application. This is mainly used in process industries like petrochemical and chemical industries, and where liquids need to be kept at a constant temperature. It's also used for freeze protection within real estate as well. And I'll just highlight, the biggest part of the business is actually aftermarket replacement. So once you install a heat tracing in a building or a factory, over the next 30 years of the factory, there's constant replacement repair. So you get like-for-like replacement businesses from your initial install work that creates a long tail of very sticky high margin revenue.
You also said that they're the inventor of electric heat tracing. Is that right?
Yes, they are the inventor of electric heat trace systems. The trade name of the company is known as Raychem. The product was invented in 1972, and they were the leader. They founded the industry, and they remain the leader today, and they're multiples larger than their next competitor.
All right, Dave Hall, I know you're in the weeds on a lot of the operations and the various companies in our portfolio. Can you help us understand what are electric heat trace systems and what are some examples of them out in the real world?
One of the big movements over the last several decades has been the move from steam heat tracing to electric heat tracing. So in a lot of places, steam is readily available, but it's very inefficient. And you may have seen just walking down the street, steam leaking from pipes, and the amount of energy it takes to produce that steam is quite high. So as we move into a more energy conscious environment, there's been a big shift towards electric. It can be powered by renewable sources, and then it's much more efficient than the steam product. I would say the benefit of electric versus steam is you can monitor it real time at every point along the pipe. So the ability to put sensors on this and control it is much tighter from an electric versus steam standpoint, which is critical for customers in some of their applications. The application we're most familiar with as consumers, it's used for comfort in bathroom floor heating. So you're certainly familiar with that.
How exactly do heat trace systems play into some of the other areas across Brookfield?
It's actually used in several of our groups. So in the commercial real estate business, the heat trace is used to keep pipes from freezing in cold climates or during the winter. But in our infrastructure business, it's used in liquefied natural gas processing to prevent freeze up of the equipment, tanks, lines, and liquefied natural gas terminals. They operate at extremely low temperatures, so the product is absolutely critical. In biofuels processing, it's used to prevent the organic material in the line from solidifying and gunking up the line. So keep in mind, these are all highly demanding, mission-critical applications for our customers.
Dave, why was Brookfield attracted to this investment? How do we evaluate opportunities like this, and where does it start to become interesting for us?
I'd say just in terms of why we like the business and why we thought it was worth pursuit is, if you go back to our investment strategy in private equity, we buy market-leading businesses that supply mission-critical products and services that generate stable free cash flow. We buy them for value where we can generate operational improvements. That's what we look to do in every investment. And if you look at our investment in Chemelex, it's really a great fit for this. This is the market-leading provider of electric heat trace in an industry with a very attractive structure. So they have a durable competitive position. They're supplying mission-critical products that are a small percent of the overall cost of the customer. And there's a long tail of predictable high-margin aftermarket revenue supporting the free cash flows of the business. So the business profile of this company is right down the middle of the fairway for what we look to invest in. Then if you look at the situation the company was in, it's been a non-core division of its last two owners, probably last three owners, to be honest. So what we saw in diligence was, and Dave should talk more about this, is that it was a well-run business. It's a market leader, great company, but it just hadn't received the level of investment or focus it could as a standalone. So both in terms of accelerating growth, optimizing the cost structure of the company. So if you add all that up, the complexity of the carve-out, the operational improvement opportunities, some of the things we saw in the business that created the opportunity for us to buy an industry-leading company that fit our mandate for value. We bought the business around 9 times free cash flow pro forma our value creation plan.
Obviously, beyond evaluating the opportunity to acquire a company, why do we feel specifically that Brookfield was well positioned to do this transaction and ultimately a good match for this company?
Yeah, I'd say a fertile hunting ground for us is corporate carve-outs. And the way we pursue that is we monitor the large multi-industrial companies very closely as they're always shifting their portfolio mix. They're always divesting assets. So we started doing work on the company years ahead of it ever being sold. So by the time nVent had decided to sell the business, that we knew it was a company that really fit our investment framework and we wanted to pursue.
In the diligence process, we assessed all aspects of the business. This included commercial capabilities, manufacturing operations, sourcing practices, functional performance. So we drilled into things like how and where they invest in R&D, how they deploy capital. And what we found is while the company has a fantastic leading position in the electric heat trace market, they have a great stable platform. The business was treated as non-core, as David mentioned. They had limited capital. They were limited in their ability to invest for growth and really constrained by what they could do. So we're excited, and we have deep experience as operators in dealing with carve-out situations that we have a high degree of conviction in the ability to drive value here, both in driving revenue growth, expanding profitability, and then helping focus the organization on key growth priorities.
We've been investing in industrials for a long time. So we've invested in industrial companies in all situations, in all geographies, but heavily in North America through all kinds of market cycles, through funds 1 through 6 of our private equity business, but then through the prior 50 years of our balance sheet. And look, I would say the market always changes, but we always find opportunities and things to do. And some of our best deals have even been done at moments where the market may have appeared expensive. And that what we find is if you're able to identify a very high quality business where you've got a real value creation plan to drive step change improvement at the company, you're going to be able to find opportunities to make great investments in really any market cycle. I'd say industrials is going to be a great place to invest in for a long time.
Were there broader market or industry trends that really led to us feeling like this was a good move at this moment in time?
I think for Brookfield private equity, this one was straight down the fairway. I think what's exciting is the legacy of innovation and research and development that the company brings, which we can grow off of. We're also excited about strategic growth. There's significant opportunity to focus on applications in the energy transition space. So we talked about some of these to win new greenfield installations in liquefied natural gas, biofuels, solar, to name a few, which we know well. The commercial capability building is going to be important. So optimizing how we service our customers, both the industrial end customers and our channel partners. And this also includes developing new products and solutions for the future. Chemelex, as we mentioned, has an amazing track record of research and development and innovation that we'll continue to prioritize.
Okay, the deal is done and now the hard work starts. What are our initial plans for the business? Where are we digging into?
Yeah, so things are going great so far. We're standing up key functions such as finance, IT, HR, and we're already well on our way to operate independently. We've also launched our value creation program, which is called Empower for Excellence. It's a name chosen by the employees. They're quite involved. They're full of great ideas. We've reached out to engineering, sales, marketing, R&D, and have got excellent input over the last couple of months.
Was there anything that surprised you about Chemelex and this industry?
Yeah, so I'd say 2 answers. With any deal, the most fun part is always getting to meet the people of the company and learn from them, learning really about the specifics of the business and working with them. That's the most fun part of every deal, and that's different in every single company we buy. I would say maybe one nuance is this company sells a lot through the channel, a lot through distribution. So just understanding the benefits of that, understanding how that worked and how to think about analyzing that as part of the overall investment was probably a little bit different than some of the things we've looked at, which have tended to be more direct to the customer rather than going through distribution.
Let's dig a bit more into supply chain here.
Yeah, so one of the big areas of opportunity for us is operational excellence. We've got a global supply chain and manufacturing footprint with operations in North America, Mexico, Europe, and Asia. So we're going to bring a continuous improvement mindset to those locations to focus on increasing throughput, quality, delivery, equipment utilization. And we've also identified some areas to spend capital and a couple of targeted situations around factory automation that we're quite excited about.
Are there any examples you can reference of bringing in some of your other colleagues or having some of that cross pollination of insight or information in the deal process?
Yeah, what I'd say is most of our deals touch the Brookfield ecosystem in one way or another. And Brookfield, as big as it is a uniquely collaborative company. So if I pick up the phone and call someone to have a question about renewable power in India, they will call me back immediately and try to help me. It's just the culture of the company. So what we've had a lot of success with in our deals over time is getting real ground level direct insight from our companies and our people. And it's just different than calling some expert advisor than when you get the straight answer from your people in the company. So this one is, Dave Hall mentioned, there's a lot of touch points within our ecosystem. So we talk to really every part of the Brookfield ecosystem that mapped against that to understand which of us or our competitors were they using, why did they do that, understand their perspective on the market, on product innovation. It really helped us build conviction. I'll give you one example. There is a very large energy company that is looking to make some very substantial investment in solar that we've got a strong organizational relationship with. And as part of that, they're going to need a lot of heat trace. So we're putting a lot of effort into helping position Chemelex well with them to give them the best chance at winning that large project. What we don't do is force cross-sell. So we want our companies to run autonomously and make the right decisions for themselves. We don't force cross-selling. But what we do try to get is companies the right at-bats and the right connections and relationships. So we're in the process of doing that across the portfolio for Chemelex.
Very good. You've been in the trenches on a lot of companies in a lot of different sectors over time. Is there anything that this deal and this company has taught you that you didn't know before that's been exciting?
I think what's most exciting about this opportunity is there's so many areas of value. In some cases, when we look at companies, there's one or two big things that we need to move to get the value out here. I think there's really a diverse set of initiatives that we can pick from. And so part of the challenge and what we're going to bring to the focus to the management team is help them prioritize where we can move the needle early on.
What I would add is, I think what Dave said is, Hollis says, spot on. There's a lot of areas, different levers for value creation. What I also say is the setup for value creation here is really attractive. We execute operational improvement plans and turnaround plans in all kinds of businesses and situations. What's really exciting about this one is, while they do need more capital, they could grow more and there's more they could do, the company is generally well invested and well operated. So for example, at their main manufacturing plant, the safety record is incredible. The overall product has received appropriate investment. The company has good people and the bones are there. So when we execute value creation plans, the degree of difficulty, some are much harder than others. I'd say this one is fun in the sense that the opportunities ahead, nothing is easy, but they're not particularly hard. It's really about focus and capital and organization. So we think we can bring all those things and get at the opportunities relatively quickly and it'll really result in a higher growth company.
I'm going from good to great
yes,
here.
That's right.
Yeah. Thank you both so much. I learned a lot. This was a great conversation.
Happy to. Thanks.
I really appreciate it. Thanks.
Audiation.